It's 7:06 by my time. You're welcome once again. We're looking at investing in Nigeria, and the first thing we're going to be looking at is what is investment? What is investing? And definition. Now, investing is the process of putting money into financial schemes, shares, property, or a commercial venture with the expectation of achieving a profit, or a process where funds are put to the work with the goal of increased value over time. One thing I want us to see is that value increases over time is one of the goal. Value increase over time is one of the goal of investing. Now, I want us to note that investments require an input of funds or assets or time or effort, and then with the hopes of a greater output. So it's like a farmer that sows a seed and then gives it time, monitors the seed, when the conditions are right, there is the hope of a better output or greater value. Okay, now we'll go next. That is greater in value than what was originally put in. We'll go straight into types of investments. Now these are general, and they are the basic traditional types that we are aware of. People know about stocks, which is buying an investment or part owning in a public traded company. Now there is bonds. Bonds simply are loans that we make to a company or the government. So we know about government bonds. We know about companies giving out bonds that will get on the stock exchange. All right, are we following me? Please wave or say yes to let me know that you are following. Thank you. We've talked about stocks and bonds. Now another one is mutual funds. Now mutual funds is a type of financial vehicle made up of a pool. That's why it's mutual, where people gather together funds from many investors to invest in securities like stocks, bonds, money market instruments, and it's usually managed by a professional. So mutual funds are funds that are gathered by a pool of investors. Thank you. I see the comments. Thank you. Pool of investors gathered together and they put the money rather than one person investing. So a professional who is the asset manager now sits over these investments, and that's what we call money market. Now mutual fund. For those of us that are joining, remember I said if you wait till the end, I'm going to give a few examples of some of the investments platforms that I use. Now we've talked about types. Going forward, we have index fund, exchange traded funds, which is a security, involves a collection or a group of stocks together or a particular asset class. Basically, that's what they are called, exchange traded funds. We also have commodity investing and investing in futures. Example of commodity investing is investing in things like crude oil, investing in gold, for the hope that the prices will rise. You know, it is said that gold usually is stable over time. Another example of investments generally is real estate. There's real estate investing, and in recent times, another type of investment are cryptocurrency, which is broken down into bitcoins and alternative coins, also known as altcoins. So cryptocurrency, new type of investment, but it's a valid form of investment nonetheless. So we have looked at the definition of investment, and we've considered that to be putting something in with an expectation of getting something out, which will be greater than what we put in. And that's the idea behind investing generally. Now, if I save money, am I investing? So that's the question, investment versus saving. Are savers investors? And the answer is simple, no. And the basic reason why, the basic difference between investing and saving is the risk component. So traditionally, when you are saving money, there's expected that there is little or no risk to the money you are saving. But with investing, investment carries a risk component. Even if you have a low risk investment, there's still a risk component to every form of investment. So saving money aside is just accumulating money, keeping money for a particular goal. Maybe I want to pay school fees, I want to pay rent, I have things to do. It's separate from investing. Investing is committing money to a particular project or a particular class of investment for gain. So, and there is a risk with every investment. Now let's go now to investing in Nigeria. So Nigeria, my Nigeria, it's a very wonderful country. very wonderful climate to invest in. And recently, we've had different things. The pandemic, a lot of things have affected the climate in Nigeria. So there are basic points for us as scale-lights I would like for us to note. Point 1, start small and scale up. Start small and scale up. Do not say, oh, I have my life savings, I'm just going to go and put it in one investment. Oh, they've told me about this type of investment, I'm going to take all my savings and put it there. No. Investing in Nigeria, you need to start small and scale up so that it does not end in tears, hot tears. So one good principle to always note is start small and scale up. Then number 2, don't leave funds idle. The worst place to keep money, aside being under your pillow, is in a bank. Don't just leave funds idle. You should learn to invest money. So in Nigeria, it's not safe to leave funds idle because we'll come to indices. The reason why funds are not to be left idle is because you will begin to lose value or the real purchasing power of that fund when inflation hits. And we'll talk a little more about this when we talk about indices to track. Number 3, be consistent. If you're saving 10%, continue to save 10%. Be consistent with whatever it is you're saving. Do not stop. Save month in, month out. Investing is for the long run, not the short term. So be consistent in whatever you are doing. Now, another key point that you want to note is that buy low and sell high. So if you want to buy gold, or you learn that, oh, the stock market is crashing. So usually with every form of recession where most people are selling, when it begins to crash, look for the low bottom. That is the best time actually to buy. Oil prices are crashing because at the end of the low, it will rise. So there are different types of curves. There's the V curve, there's the W curve. So note those times. The key principle in investing, one key principle in investing is to buy low and sell high. Now another one is invest only in what you understand. If you're here, you don't know what cryptocurrency is, my advice for you, give it go. Your friend comes and tells you that, come on, crypto is the new era, forex is the new era, I have this that does this. Please, you don't understand it. There's nothing wrong in saying, okay, give me time to understand this. If the person cannot fully allow you to understand it, give it time. Do your diligence. Then diversify. Do not put all your eggs in one proverbial basket or asset class. We'll talk a little more about this. Do your due diligence, diversify, invest a little in different classes so that you may understand the best class that you go in. Then understand, another one, your risk profile. Are you someone who has age on your time and wants to invest for the long run? So you can afford to put certain things in some high risk investment or instrument, and you know that, okay, I'll get over it. Even if it's lost or something happens to the market, I'll be fine. Do not go and be like the fathers who finished working, retired, and then they said, I want to go and start a fish farm. Fish is what everybody's doing. Put all their life saving in fish farm, and then something happens, they don't know that the fish can eat themselves. They ate themselves, and then they began to cry, and it ends in hot tears. Do not invest in what you do not understand, and do just a little per time. Another key principle, don't borrow to invest. Use your money first. So if you are investing, I even advise people, do not borrow to invest. It's better to invest with what you can afford, what you have, and what you can afford to lose. Then the final one I'll talk about is keep compounding. Keep your initial capital safe, then play with the profit, and keep compounding the initial capital. Okay, let's move on. Financial indices to track. Because Nigeria is an interesting nation. So somebody comes to you and says, I want to give you an investment that will give you 5% in 1 year. And right now, that actually is not a bad investment. We'll get to some of those rates later. But one of the indices that you should track is the inflation rate. Inflation rate simply means the price at which goods increase over time. We're all familiar with sachet water. Sachet water at a point in time used to be 5 naira. In some places now it's 20 naira. Inflation is what has happened. That has made what 5 naira can buy. You now need 4 times of that 5 naira to buy it in some places, or in our own place here 2 times 10 naira to buy 1 sachet of water. That is inflation. So presently, according to CBN, July 2020, the inflation rate in Nigeria is 12.82%. So if you are doing an investment that is giving you 5% in a year, that money will have lost value by 12.8%. So at the end of the year, you actually have gained 5% but have lost value of over 7%. Do we understand? So that is one indices that we should always note and track. Another one is money market rates, money instrument rates, the treasury bill rates, to have an idea of what it is to invest. You know, sometimes ago when we started a group of investing amongst us, we were investing at a rate of 18%. Treasury bills and mutual funds was giving us 18% in 2015. Right now, I checked the CBN website, and as at August 12, 2020, the CBN website for 91 days investing is 1.20%. You heard me right. 1.20% in 91 days, 3 months. For 182 days, it's marginally high. It will give you 1.38%. For a whole year, 364 days, you will get 3.19% with treasury bills in Nigeria. Now, let me give you the interesting update. At the 1.2%, the Nigerian treasury bills was oversubscribed. That means there were more people than what CBN was asking for funds for. So for instance, if the CBN was asking for 100 billion, there were people that were willing to put more than 100 billion for 1.2% in Nigeria. And why are people rushing to treasury bills? Because it is the safest form of investment with a low risk, because the guarantor is Nigeria itself. But right now, the treasury bill rates are terrible. Another thing that we should also consider are the savings deposit rate and the prime lending rate. I know the funny thing, as of today, the savings deposit rate is 3.78%. That is how much you will get in a year if you leave your money in a savings account. So unfortunately, investing in Nigeria, the Nigeria economy is now so interesting that you make more money keeping your money in a savings account than with treasury bills. Why? Because it has been oversubscribed. Nigeria is trying to push and show up in dollars, and a lot of things are happening with the demand and supply market right now. People are scared because of the recession, everything that is happening globally. Everybody just wants safe instruments. But safety in this season, it will not help grow this level of money. It's good to be safe, but it's also good to be practical. Now, other indices that we can track are what's the NSE saying for those of us that are interested in stocks. But let's go straight to, okay, before we go into investment types, another indices that I want us to track is what is actually food inflation. You know, many times they say, oh, things are not bad, it's just 11%, it's just 12%. But ask, what is the cost of Indomie? As cost of Indomie risen, as cost of tomatoes, the basic thing that the Nigerian man needs. So sometimes you find out that the food component of inflation may go as high as 18-20%. So that means we need to be saving and investing at those rates or marginally higher to ensure that we keep a level of lifestyle that we're used to. So there is a measure of investing that we must all learn to succeed in Nigerian market. And let's look at Nigerian investment types. I hope you're following me and you understand, and I'm not too fast, although some say it runs in the blood, if you understand. So if you're following me, please just let me know. A yes, a hi will do it. And I see the comments. Thank you so much, Iboko. I see what you're doing. Good on, you are doing well. So, but now at investment, Nigerian investment types, if you're following me, please, a hi, a yes is good right about now. And the first one I want us to see are, thank you, financial market-based instruments. And under that, we look at money market, we look at capital market. So the money market, thank you, I see the comments, thank you, thank you. Money market is the short-term lending, while the capital market is the long-term lending. So the money market deals with treasury bills, deals with mutual funds, and fixed deposits, certificates of deposits. I will talk about some of these. So fixed deposit, when you go into the bank and you drop in some money, and you keep it there for a while, they give you a fixed rate. So that's the thing. Thank you, I see the comments, thank you so much. While the capital market is stocks, investing in stocks, getting a broker, you will need a CSCS number. I'll talk about examples and give, for those of us that wait to the end, practical examples from my own. And then we can also get bonds. So we've talked about the financial market-based instruments. The next I want us to look at are under investment types. And we'll look at fintech investments that are rising. The reason why investing in Nigeria has become interesting is that there are non-traditional investments that give better options than the 1%. In fact, I checked mutual funds today, and mutual funds, one of the ones I use is 4.25%. So that is higher than treasury bills. So it's better than the traditional treasury bills, bonds that people do. So mutual fund is something to consider. Another one that we can consider are fintech investments. Now, one thing we should note is that all the fintech investment, they must have asset managers that back up whatever investments they are collecting. So we do not just rush and give fintechs our money. You must do due diligence, and we'll talk a bit about it, to see who's your asset manager. So some of them use Afrinvest, some of them use Coordinator Capital, some of them use Cardinal Stones. They must have asset partners, managers that are registered in Nigeria and licensed by the SEC. Otherwise, we shouldn't put our money in them. Now, example of tech investments that we can use are piggyvest. Now, piggyvest, for instance, is backed or keeps their money with ICO Capital. So ICO Capital is the one that is licensed by the SEC. Piggyvest collects because they believe that, oh, Nigeria is a youth population. A lot of people are online. Everybody drops their funds on from piggyvest, and then their investment partner is ICO Capital. Another one is Cowrywise. Now, Cowrywise use both Afrinvest and Meristem. Then we have several like that. We have OPay, who has the whole wealth option. Now, the reason why some of these are better is that they are open to a lot of other investment types, foreign level investment. So they give traditionally between 7 to 10% in Naira annually. So that is better than 1.2%, 1.5%, 1.3% that we see the CBN is presently doing. So one option we can consider is fintechs. Another that we can consider is agricultural opportunities. Now, please, I'd like to advise, if you are not able to see what we're doing to the end, please watch the videos. It will be available on YouTube later on, so that you don't just take one part. This is how you go and do agriculture, and then you run into agriculture. We're going to come into due diligence later. We're going to talk about the types, the risk level, and the reward. You know, they say the lower the risk, the lower the reward. The higher the risk, the higher the reward. So I'm just laying out the opportunities now. Now, in agriculture, there are 4 types of opportunities that are there. There is the crowdfunding, where you have agri-tech, where it's agriculture plus technology, where you have those crowdfunding platforms. So you have the tech companies come and they have farmers that they sponsor. They get funds from us. The tech companies act as the investment manager, and they fund the farmers. When the farmers sell, some of them off-take from them, and when the farmers make a profit, they then share between farmers and investors. And it has been an interesting deal pre-COVID. We'll talk about that. Now, the second one for agriculture is direct opportunity in farms. You know your uncle that is a farmer, partner together with him, that's a direct opportunity in farm. Another one is equity investing, where you have opportunity to buy in a particular share in an agricultural opportunities. And all of these things are available. There are lots of opportunities like that and more. Another type of opportunity is real estate. So real estate is a very wonderful opportunity. This challenge for a lot of people is fund, but now there is what we call REIT, which is Real Estate Investment Trust, that allow for people to put in a little money. So they crowdfund money to do real estate projects. But typically, rather than own the whole project, people now begin to own units of that particular project. But there are things to note in real estate. You know, maybe on popular demand, we'll talk about real estate more, because you should know what kind of location are you looking at. Is it rural or urban? What kind of documentation is available? Is it gazette? What does gazette mean? Is it receipt? What does it mean? Is it a deed of assignment? Is it C of O? Is it R of O? Is it government consent? Is it an acquisition land? There's a lot you have to check. Has it been verified? Is there lawyers still involved? Is there an inheritance land? What type of property is it? Then another thing we should check with real estate is, of what use is it? Is it an investment? That means I put my money in and I will get my returns over a space of years. Or is it an emotional need, for the need for most of us to have a house? Or is it something that we just want to use? Okay, it solves a particular problem. Those are some of the things that we should look at. Then what kind of plans are available? Do I have to drop all the money at once, or can we grow over time? Another type of investment, real estate is a whole world on its own. I'll take two together, is exports and venture funding. Now with exports, we're basically looking at opportunities to earn in foreign currency. So for instance, we have things that are very affordable here, but are expensive over there. So if you get people that have already gotten demand, they've already gotten suppliers, and they need, sometimes they need people to fund them because they need to buy in bulk. For instance, sesame seed. A friend also shared recently another agricultural commodity that everybody overlooks here, but it's hot cake abroad. There are several like that, several commodities like that, and people are demanding for it in volumes. For instance, do you know that the market for cashew in Nigeria is so large that people that are keen into this market are not Nigerians? There are people from Vietnam, Vietnamese, there are people from Thailand, there are people from Indonesia, and they are not in Lagos, so they are not in Banana Island. They are in places like Oshobo. They will go and aggregate. They will buy up trees. I mean, when I heard it, I was livid. They will buy up trees. They don't just buy up the fruits. They will buy up trees for like 5 years. So everything that it produces for 5 years, they will just buy and ship. Now, in Nigeria, the cost of 1 ton of unprocessed cashew is about between $1,000 to $1,600. But when it is processed, it becomes over $10,000. So these people buy at 1,000 and then go and sell back to us and sell to people at 10,000. So if you have somebody that already has that kind of fund, but it needs people, that kind of opportunity needs people, those are opportunities for export business. So I'll talk about my own examples and some of these opportunities that we can do. Maybe not so much of my examples, but I'll give just a bonus. Venture funding. Venture funding is you want to buy long-term shares in a company. For instance, Zoom was an idea, and Zoom will have needed funding at some point. So imagine the person that started Zoom needed funding to test run his idea, but he did not know if it will run. So it's a risky business. But it comes to you and says, okay, put money together, let's fund this idea. If it goes, you get 20% of this business. Remember, anybody that even has 1% in Zoom right now is a very good big boy, is actually in a very good place. So venture funding gives angel investors and investors generally opportunities to stick their noses in other businesses and upcoming businesses by providing funds with a hope of a large payout someday. Thank you very much, everybody, if you followed thus far. We look now at due diligence. It's not enough just to say we have these investment options. What are the things that we need to look out for? In due diligence, there is a whole load of checklists. So I'll just take a few. One thing you need to do is check the company. Anybody that is asking you to invest, you must be able to ask your question, do I know this person? Or one question I ask is, who is the VIP behind it? That means, who is the person that I know, or someone that knows that this person has been credible over the years? Because investments have risk, and the risk is not the problem. But the challenge is, what will the investment manager do if there is a problem? Will it be someone that will pick up his bag and run away? Like Yorubas like to say, does his needle have a thread? So those are part of things that we look at in due diligence. So let's just run through a few of those lists and then I'll come to questions. Now, ask, what kind of products are these people investing in? You must be able to understand it. Remember, don't invest in something you do not understand. So if they come and they give you that, oh, it is just the people that will come to Ponzi schemes, if it's just, oh, people are just helping themselves, people are just like, they try to give you one spectacular way, but you see that rubber eats the road. I don't understand this business. What is Zoom doing is connecting people together in a time when people cannot go out together. What's Facebook doing is giving people access to social media, it's giving people access to business, it's giving people opportunities to connect with each other. So every business must be able to be defined in a single sentence or to a child, so that the child can say, okay, I understand. So if you don't understand it, the business is not superb. It's actually something you should watch out for. Now, is there insurance? Is there a performance bond? For instance, one investment company I know about, they will tell you that there will be a post-dated check that says that this is the amount you will get at the end of the year, and they will sign at the end of the investment period, and they will sign with it. What is the level of the insurance? Now check. You know, a lot of these agri-tech companies say that they have insurance with Leadway. Leadway is the insurer. if you understand what I mean. But if you go to Leadway website, you'll find out that a lot of those agri-tech companies are not registered on Leadway. So a lot of them claim Leadway, but maybe they did one insurance 2016, but their insurance right now has elapsed. This is 2020, and they are still claiming Leadway. On their website, it's still Leadway. Please, you need to lead the way to Leadway to find out if their insurance is still ready. And then you must be willing to ask questions. If a company that wants you to invest, they want to collect your money, but they're not willing to answer all the questions that satisfy you, please run for your lives. Run with your money for your lives. So, what regulatory agency oversees them? Right now, a lot of agri-tech, a lot of fintechs are not regulated. A few are, but a lot of them are not regulated. A lot of them actually are not, do not have registration details. So it's just fancy website, no background details. So if everything goes off, once the website goes, there's nothing you can hold. So those are part of things you need to check. Now, what is the dispute resolution process? It must be stated in the terms and conditions of the contract. Request for a copy. Have a legal person go through it. Try and read through it. If something is too bogus, it's too vague, usually it is. Ask questions. Now, is there a clause for alternate dispute resolution? Is there a clause for arbitration? Is there a clause that allows people to mediate in between when there's a dispute? Now, what is the website of the company? Or the company doesn't just have a website, it's just hanging from there. Check the website. Are the executives shown? Do they have credibility? Do you know somebody that can say, yes, I know this person for at least 10 years. I've been able to see this person up and down, doing ups and downs. I've seen this person grow. I can vouch to a certain degree for this person. Do they have an office? Do they respond to phone calls? If they don't respond to phone calls before you invest, there's no guarantee that when they respond to phone calls after you invest. What kind of signatories do they have to their accounts? Is it just a Class A signature? Do they have Class A and Class B? What you want to see is that, is it a one-man business or are they a team of people behind it? What's the key man risk? If something happens to this person, if this person falls ill, is not unavailable, does the business collapse? Are you sure you're not taking all your money and put it in a sole proprietorship? Those are things. Are they willing to sign an agreement? Are they willing to put pen on paper and do a video? That yes, so we took this money from Brother Bayo, and this is what we want to do with it. This is when the money will come out. This is my name, and this is what we are doing. Are they willing to do that? Google them. Is there a negative review? Trust realestate. Have they said different thing about them? In fact, just put the company, type the company, and then put review, put scam in front, and search. If anybody has put anything, those are things you need to watch out for. What's the management structure like? Are there audited accounts? Is there enough savings to withstand the loss? Because investment has risk. So they may have been investing for 3 years, but they have not collected people's more money, and then there's a major challenge. For instance, COVID. Are they now claiming force majeure because of COVID, or are they still able to continue? So a lot of companies that we invest in, some of them now said COVID is a major issue. This is time to begin to separate the men from the boys, to see how they respond to challenging times. Okay, now let's now go to how do you start investing? What's the process of starting for us as Skelites? Number one, know yourself. What's your goal? Outline your goal. What are the major needs? If you know, for instance, that your wife is pregnant, or for instance, your rent is due in 3 months, this is not the time for you to now go and start saving a chunk or investing a chunk that you'll be able to pay rent. That is not a good thing. You should know your goals. You should understand the levels where you are per time, and you should scale up there. Then you should understand your major needs. What is your risk appetite? Are you the kind of person, if you put 1,000 in a business, and then you heard that there was a trailer accident around the street or local government where that business was located, and your BP will go high, your risk are very low. Please, if you are that kind of person, just go and do treasury bills and mutual funds. There is no wahala. You know that nothing should happen to Nigeria by the sure mercies of God. Now, the next thing is insurance. Nigerians don't like insurance. If you cannot afford to replace something, Biko, insure the something. Insurance is good, so it's something we should do. Another one for us as we start this process is educate yourself. Do not compete with anyone. Understand that it's a long journey and you need to educate yourself. So you want to do stocks, and you see people that are already doing stocks, they're already making a lot in stocks, but you find that you don't yet understand stocks. Please do not rush. Just take it gradually. Commit to a learning plan. Nothing stops you from learning for a year. As you commit to that plan, you will get better, and then you can make better investment decisions. So another thing is to diversify your asset class. For instance, do not put all your eggs in one basket. Do not put all your hopes on NEPA. You must know that there must be a backup gen, that in case NEPA goes, the gen comes on. Eventually, when we begin to find out what happened, do you understand? You must diversify your asset class. So if you are doing agriculture here, you must do a little of the other type of investment. For instance, at Kabzeel, even though we have sweet deals because we've negotiated with partners locally and abroad, we still have some of our funds in mutual funds. So at the end of the day, what we get at the end of the year will be compared with all of this, will be an average of all of this, because we can't stay only with one type of investment. The risk and reward matrix. So it's basically a table that shows the risk level, the reward level. So the low risk, so there's low risk, low rewards. There's low risk, medium rewards. There's low risk, high rewards. Then there's medium risk, low rewards, medium risk, medium rewards, medium risk, high rewards. Do you understand? Then high risk, low rewards, high risk, medium reward, high risk, high rewards. So I'll just take a few. Example of low risk, low rewards. If your risk profile is unequal, no risk. I will always be on gen. I will never use power. I am low risk and I'm willing to take the low reward. You should stay with treasury bills, fixed deposits, mutual funds, and then gold commodity. If on the other hand you are someone that says, I love high risk, high rewards, if all my money goes, I'm not afraid. If all my money comes back with much profit, I'm not afraid. What you should stay with is cryptocurrency and forex, and then a few venture capital, venture funding, export options. Those are high risk, high reward. But if you are somewhere in the middle and you say, I am medium risk, medium rewards, you should then be looking at agri-tech, crowdfunding opportunities, real estate, then the fintech apps that we'll talk about, and a bit of stocks. Then you know that. So a very good investment portfolio will be something that has the middle, from low risk, low reward. So you can put 30 to 40% low risk, low reward. Then you can put another 30 to 40% in medium risk, medium rewards, and put 10 to 20% in high risk, high rewards. Moreover, don't get greedy. For everybody that is making money in forex, somebody somewhere is losing money, or a government somewhere is losing money. Okay? We'll begin to round up. Now we'll go to the interesting one, identifying Ponzi schemes. Who remembers MMM? Somebody here, one of our members that is here now, calls it the Mokumodaro scheme. If you remember MMM, I made one mistake with MMM. One very interesting mistake. The thing pained me. And the mistake is not that I joined, or don't think I joined, I didn't join. Is that when colleagues were telling me that, come and do, people are helping themselves, that who you help, we are helping each other, you know. I told them that, guys, this thing cannot last. It will crash. The mistake I made was that I gave them 1 year. They told me around June. I said, okay, let's see what happens by next year, June, that this thing will have crashed. Not knowing by December, MMM became Wogbe, Woku, Wodaro, WWW. It turned upside down. If you don't understand Yoruba here, sorry. Basically, MMM went AWOL. A lot of people lost money. I've only heard of a cooperative that took members' money and did MMM with it. I hope they will have recovered by now, because they said, what is Ponzi scheme? What are Ponzi schemes? Ponzi schemes are as old as time itself. It's a system of robbing Peter to pay Paul. It was made popular by a man, Charles Ponzi, who came up with a system to say, give me your money, I'll double it back in a couple of weeks. And a lot of people bought into it until like it happens. It was Ponzi'd. Ponzi schemes are not pyramid schemes. Now, I need us to understand the difference. If you understand things like some level of multi-level marketing, if you understand things like there's this gold shield that was popular, IFA, some of those companies sometimes ago, they are not Ponzi schemes, because Ponzi schemes are outright scams, but they are pyramid schemes. Pyramid schemes are simply schemes that require people to get more people for people to be paid, for the older people to be paid. So they require more subscribers, and the people that join pyramid schemes are usually aware. But it's not usually the case with Ponzi schemes. With Ponzi schemes, there is a system of generating returns for early investors by acquiring new investors, similar to what pyramid scheme does. But usually it is with scams where people may not be aware. Now, the greatest of all times type of Ponzi scheme happened very recently. You just need to go and Google the name. Bernie Madoff was a man who is the greatest scam of all time, who was a very seeming legitimate man, that he deceived his own family. They didn't know. He made off with $50 billion of people investing. And if the recession of around 2008 did not happen, people would not have known. Because what happened is that a lot of people just requested for funds at that time, and that's why we could not pay off, because it was simply paying early people with new people. And to join Bernie Madoff's scam, you needed to have at least $1 million. So it was a scam for the big boys. And people believe that this is so legit because the guy was, just read up about him. So what do you need to know about Ponzi scheme? There's a promise of high return with minimal risk. If it sounds too good to be true, it usually is. For instance, they tell you, I'm going to double your money in 2 hours. Jesus. Run for your life. And then they give you consistent returns. Nothing happened. COVID comes, COVID goes. It is 50% in 2 hours. COVID does not affect what you are doing. Just bring in your money. They want it now. And then the investments are not registered. They give you complicated details that there are people here that need help, that are helping each other, and we're just helping ourselves. There's even one scheme, Ponzi scheme. I just read a list of Ponzi schemes that have happened over the years, and I found out that there's one that deceived people to believe that ants could actually be, there's a product in ants that could be aphrodisiacs. And people bought into the case. There are so many several interesting Ponzi schemes. There's another thing you need to note is that there's really no product. There's no service that the things are giving, that the scheme is offering. Just that people bring in money and getting money. So they're not trading, they're not investing, they're not doing anything. You don't see a product you can tie it to. They always need more investors. You need to get more people. There's always pressure that, oh, bring more people. Those are Ponzi schemes. Now let me give, as I begin to round up here, let me give my own take. The next kind of Ponzi scheme that we're going to see in Nigeria, this is my own, looking at what's happening in Nigeria and giving a prophetic outlook, or a, do we say, a guess, an educated guess. The next Ponzi scheme is going to be in agri-tech. And why? They are yet unregulated. A lot of people know that they are legitimate ones, so people gather together and they bring funds together. That will be a very good opportunity for one who maybe have been credible before, agri-tech company, to rise and say that we're going to give you this rate, and it will just be a major scam. There are already some like that, but the next major one I'm expecting a Ponzi is from agri-tech. So now it's time for bonus. If you have questions, please, you can begin to drop it. So under bonus, I'll be talking about options, things you can invest in. Someone is saying there already is. That's the next one. I know agri crowdfunding is going to be the next major Ponzi. Now for stocks, I would like for us to consider Meristem, and then Stanbic recently released an app. So let me give a caveat. At this point of the talk show, of the webinar, what I'm giving is not investment advice. I'm just telling you things I've used, things I know about. So please do your due diligence, contact your advisor. Basically, just beware. All right, so for stocks, I advise people to learn. And there's Meristem. Meristem now has Merry Game. Merry Game is basically a game, but gives you about $1 million of fake money, but allows you trade in real life. So it will assume you have $1 million in your wallet and you can buy stocks as you are learning. So that way you can see if you have done well or you have taken it to this stick. That means you carried it to the stick. Ogbebagi, you get it. If you're not Yoruba, just look for somebody Yoruba to explain to you. So Merry Game is good. It will help us. Okay, I see that question about pyramid scheme. I'll come onto it. Now another one, mutual funds. So like I said earlier, mutual funds, my advice is you can do Stanbic IBTC and you can do AfriVest. As of today, Stanbic IBTC is giving you 4.25 annual for your mutual fund. The guaranteed is slightly higher. AfriVest also has there, so you can consider for mutual fund, consider Stanbic and consider AfriVest. These guys should pay me though because I have free advert, but there are things that you can do. Now for another one, commodities I want us to invest in, we can invest in gold. For instance, a gold buy last year in Naira, when I say gold bar, a very tiny beanie gold bar, very small. In fact, if you throw it up, you will feel it. You will hear it sound. It's about 1 gram. It was 17,000 last year. Right now, it's about, at the last time I asked, it was 25,000. So gold is something we should do. Okay, Eurobond, I see that. I'll come to that. So you can buy refined bars, not jewelry. Some people go to buy jewelry. Do not buy jewelry. If you buy jewelry, you are buying at an amount that the jeweler has worked in. So if you buy a refined bar, you buy the cost of the bar refined. So if you are going to sell it off, the person that will buy it off of you, whether it is a gold bar, if your ring, for instance, is 10 grams of gold, they won't buy it at the refined price you bought it. They'll buy it at the basic price of 10 grams. So it's better to buy refined grams. Then another one, you can get real estate and properties. I know there are a lot of people that are doing property. I have only one company I want to recommend. It's quite high, but they give a plan, and that's Mixstar Africa. So check them, they make sense. Then for fintech, while there are a lot, we have Cowrywise, we have Trove, we have Rise. I will simply stay safe and recommend piggyvest. It's good. A lot of young guys that are there, and they have their flex, their safe lock options. They are good for us, so let's stick with piggyvest. Now, agriculture opportunities. Let me start by saying, during COVID, some of them, for instance, Tribal Greek, the almighty Tribal Greek, used to be the second rated in Nigeria. Second rated in Nigeria for crowdfunding companies. But during the COVID, they couldn't actually afford to pay. So, for agriculture opportunities, the good ones that we still have Farm Crowdy, Group Farmer. Then the ones that are in question mark, we now have Farm Funded and Thrive Agric. There's still a few of them, but let's just stick with this. Now, for export and venture funding. For export, I will ask us to go and check the NEPC website. Check the NEPC, that's the Nigeria Export Promotion Council. Read the list of promoters that we can join. Then try to attend a training, and then so that you can get contact with people that have been verified. For venture funding, there's a company in Lagos that is supporting venture funding, VC4A. That is Venture Funding for Africa, or Venture Capital for Africa. So VC4, letter 4, and then A. So you can check that. Now, if you want to know more about due diligence, there's someone I recommend so much. That's Bomi Plumter. She's a very wonderful person. I've attended her course. If you attend the course, you'll be very, very blessed. It's not very expensive. It's less than $100, and it will be very good. And finally, before we come to questions, another platform that we can learn from is Money Africa. So Money Africa, they have paid for platform, and they have the free platform on Telegram. So if you can request and join the free platform on Telegram, the only challenge you're going to get is that there are a lot of comments. But just take your time, read up. They have a good team. And then if you can subscribe also, I think it's used to be 10,000 for 6 months. I think they've increased it, COVID things. So things like that. Money Africa is a very good team that will help us. So with these few points of mine, including our special NEPA session, I hope you've enjoyed this session. Thank you so much, guys. We indeed are in the wealthy place. Now to questions, and I have just about 5 minutes left. All right, question 1. Let me see if I can scroll up.
What is this thing?
Pyramid scheme. Is it credible? It's good if you are a early investor. The challenge with pyramid schemes are people run out of gas. People tend not to get people that are able to get more people. So if you keep getting people, pyramid schemes will work. MLM, most times are pyramid schemes. That's multi-level marketing. So usually people that enjoy and make it big at multi-level marketing are people that get in first and are able to call other people in later. So better if you have a pyramid scheme that has a product. So for instance, you see some of these health products, they already have drugs and things that people buy. That is what separates it from a Ponzi scheme where there is no product. So would I say it's credible? It's a business model, but it's not the best model for me. Euro bonds. So remember I said bonds are basic debt instruments where you borrow. So for instance, the Nigerian government now has Euro bonds, which are dollar denominated debt instruments, money market instruments. So for instance, the reason why we even like it in Nigeria is that it allows you hedge your returns and get your returns in dollars, which hedges against devaluation, inflation, so you can invest in dollars, which is relatively stable. So Eurobond is a type of bond, government bonds. So the Nigerian government floats it, and then different banks buy into it, and people can also buy into it. The challenge many times with Eurobonds is that the minimum you need to buy is high. So there are some companies that will allow you to buy $1,000, and there are some that say the minimum is $10,000, $20,000. There are some that go as high as $50,000 to buy. But Eurobonds are forms of capital market instruments. We'll just have a few minutes more. Yes, where can you get gold to buy? Well, gold is actually available. Lagos, Nigeria. There's a company that buys red gems, but they're not always available. Then you can check a lot of this. The same will buy foreign, what's this thing? Dollars, foreign currency. So you actually can get from a lot of the, I want to say abokimen, Hausamen, if you understand what I mean. But the best place, a lot of people travel to places like Kano in the north and they get the gold. The challenge is understanding or getting the ones that the jeweler hasn't worked on, that is the raw gold. So, do we have any questions? I think that is all for now. Thank you guys so much. This has been interesting. We have our webinars once in 2 months.